The sudden crash of the Terra stablecoin Luna and UST has been a very painful experience for the entire finance and crypto world.
Luna has crashed.
Cryptocurrencies that are collapsing this week.
I have never seen anything like this.
Some people lost a whole bunch of money and others lost a fortune. Just a week ago, Terra Luna was ranked top 15 in the entire altcoin list based on the crypto market cap, and now today it's completely wiped out. So in this video, let's talk about the 8 lessons we can all learn from Terra Luna crash and how to carry these lessons moving on to the future and to better prepare ourselves for the upcoming financial turbulence. And let's get into it right now. Lesson number 1. Black swan events like this can happen really fast in a really short period, and sometimes it's unpredictable. So you can see in front of me, I have a Terra Luna's entire chart since 2019. Each candlestick represents 1 day of data. You can see everything happened within 24 to 48 hours. And that's why really famous and successful hedge fund manager Ray Dalio always has something called all-season portfolio, meaning he structured a portfolio in a way that can handle all sort of market conditions, no matter if it's crash or market recessions. His portfolio will perform. Lesson number 2. Big project like this, even though they're in the top 10, top 15 in the entire crypto market cap, it still has potential to fail. Let me give you another example. Here's the list of top 15 altcoin back in 2013, almost 10 years ago. Besides Bitcoin and Litecoin, top 13 other coins are all gone from the list today. That shows you that in the crypto world, because of the volatility, because of the project rise and die, so there's no such a thing called a guarantee. Lesson number 3. When crisis or crash happens like this, you really cannot rely on crypto exchanges alone, such as Coinbase or Binance. These exchanges are really centralized. In black swan events like this, they all have a mechanism in place to prevent from money leaving their exchange in order to prevent from their platform being crashed. They will probably do something such as blocking the withdrawal or delaying the withdrawal, or even slowing down the withdrawal in order to control the dip of this market crash. Give you an example here. Binance made an announcement on May 12th, mentioned that from this period of time, withdrawal on Terra Luna network will be temporarily suspended due to the high volume of pending withdrawal transactions. Later on, obviously, they have to recover the withdrawal process, otherwise people will get really pissed off. Again, not blaming on these exchanges because they have to follow their own protocol in order to save their platform. If you truly want to own your digital assets like cryptocurrency, you cannot leave it on a platform like exchanges. You want to move it off from the exchanges to your hardware wallet or cold storage. So this way, you have 100% control over your digital assets and tokens. Lesson number 4. Not all stable coins are stable now. The top stable coins such as USDT, USDC, or BUSD, Binance version of the USD stablecoin, are all assets-backed stablecoins. These assets including treasuries or bank balance sheets. They are not algorithmically based stablecoin. However, Terra UST utilizing something called arbitrage in order to maintain that one-to-one peg to the US dollar. As you can see here, the stablecoin UST is supposed to be at $1, and right now it's at 0.08. That is 99.92% of a crash. So we can simply conclude that not all stable coins are created equal. Lesson number 5. Don't over leverage unless you can handle the downside. A lot of day traders or crypto investors like to actually do margin trading or leverage to maximize their profit margin. I get it. However, it will make you overexposed to the market. When a sudden event like this happens, it can literally wipe out your entire account. Unless you utilize something called a stop loss, and that itself is a deep rabbit hole, because if everyone utilizes stop loss, then the centralized platform can see everyone's stop loss, and it's easy to get manipulated in that level. Lesson number 6. Warren Buffett's famous quote goes, "Only when the tide goes out do you discover who's been swimming naked." The real value of these digital assets will be known or revealed during this crisis time. Think about this. There's over 100 projects built on the Terra or Terra ecosystem. Just because a project has big investors behind it or venture capital or institutions doesn't mean it will succeed for the long run. Lesson number 7, don't invest into the projects you have no clue about, and always do your research and due diligence to learn about the project first. Each one of these projects has these following features. There's going to be a team or group of people behind the project, which means you need to go really learn and study these people or the team of the project. And there's going to be a tokenomics about the token, an infrastructure of the project, mining and burning mechanism, and maybe some investor or group of investors behind a certain project. As you can see here, coin market cap, top left corner, there's around 19,475 total coins in the entire crypto industry that's listed here. Every day there's going to be new coins launched to the crypto industry. So that is going to create lots of confusions for people. Good lesson learned here is don't follow the trend or hype of the marketplace. Always do your due diligence to study a certain project first before you put your hard-earned money into these crypto tokens. Lesson number 8, when the crowd, us, the people, when we lost our trust with certain tokens or projects, the price will truly reflect itself. The reason why Bitcoin went from $10, $20 back in 2008, 2009, all the way up to 60K, 65K, and down to 30K at the moment, that is because us as a society or people or the mass, we agree that Bitcoin is valuable. When we have a mutual agreement like this, the price will certainly go up. On the other hand, if a project founder is calling out people poor on social media like Twitter, that is probably another red flag. When people lose trust into these founders or these projects, the project will crash and the price will dip. So that sums up the entire 8 lessons learned from Terra Luna USD crash. If you had invested into the Luna prior and if you lost your money, I'm sorry to hear that. Many people have lost a lot of money in the crypto industry because none of this is predictable event. So hopefully these lessons can carry on, can help us to be more mature in when it comes to crypto investing. And make sure you share this video among your friends and family before they invest into their hard-earned money into crypto industry, which is super volatile and risky. And if you enjoyed this video, I'm going to leave another video in this corner right beside me that is basically Michael Saylor investing everything that he has into Bitcoin, and something really interesting, and hopefully you enjoy that. I'll see you guys in the next one. Cheers.